Good afternoon and welcome to the first in a series of BOQS webinars focused on assisting our clients with their personal and their professional financing needs as we head through this COVID-19 pandemic. My name is Hugh Lander and I'm the Chief Executive Officer of BOQ Specialist. I've been with BOQ nearly 9 years. And in addition to my role of running the part of the bank that is specially focused on doctors, dentists and vets, I'm also the chairman of the Australian Finance Industry Association. I'm very passionate about ensuring that we provide quality and supportive financial services to the broader healthcare profession from graduation through to retirement. And this means active support through the various life events. And no doubt a few months ago when our nation was facing the crisis of bushfires, did we think that we would be sitting in the position we are today with the ravages of COVID-19, where we really are in a fight for lives and livelihoods. We're all going to have to adapt our way of lives in dealing with the current lockdown, but I also believe that, that when this crisis does end, and it will end, that we're all going to have to do things differently. For me, who was accustomed to doing long days in the office, I've had to adapt to working from home. As you can see, I've borrowed my children's music headphones and I'm having to communicate in a very different way than perhaps what I'm traditionally used to. On a much more serious note, the issues that our economy and indeed our health system are facing at the present moment are significant. A number of your businesses have already been materially curtailed. Reduced procedures brought about by government restrictions to slow the spread of the virus, as well as certainly having an impact. This is impacting, and we've certainly seen that in the hardship applications that have through. Hit hard has been the dental industry, followed by those of you that are in general practice. But it is fair to say that all parts of the broader healthcare system have been and will continue to be impacted by this crisis. From a broader economic perspective, the Australian economy is expected to shrink about 7% this year. And this is the biggest economic downturn that we've seen since the Great Depression, and indeed our first recession in almost 30 years. Governments, both federal and state, are doing their best to minimise the loss of life and livelihoods. And in terms of economic stimulus, both in the form of fiscal and monetary policy, have been significant. I think the governments have taken the approach of whatever it takes, and I think that's a sensible approach. Currently, the committed expenditure is in excess of $330 billion, or approximately 17% of GDP. This has been vital to ensure that businesses and workers can keep going, albeit in hibernation. Current expectations are that unemployment, which was edging up above 5% before this crisis, will exceed 10% by Q3 this year. And economic modelling has suggested that had the government not taken this significant stimulus package approach, that unemployment rate would have exceeded 15%, which again would have been extraordinarily significant. The Reserve Bank of Australia and more broadly the banks have provided unprecedented support for households and business through this period. And BOQ has been working closely with the Australian Banking Association and the Australian Finance Industry Association to ensure that there are a range of packages to support our clients. In this webinar, and it's the first of a series that we're putting together, the focus is on ensuring that you understand the initiatives that you as our clients have access to, so that you can withstand and hopefully recover quickly when this crisis subsides. I have a small slide deck that I'll run through, after which we'll have a Q&A session, which will be facilitated by Tim Bowering, who is a New South Wales Regional Manager and Head of National Partnerships. If you think of a question while I'm presenting, please click on the Q&A button at the bottom of the screen, and a text box will pop up, and you can type in your question, and Tim will moderate those questions, and I'll endeavour to answer them at the conclusion of my short presentation. We only have 45 minutes, and delighted we had over 200 registrations for the webinar, so I'll hope to get to all your questions. If not, we'll reach out to you afterwards, or please get in contact with your banking specialist. We're here to help you now more than ever. So what I'm going to cover today is firstly, how you can minimise your cash outgoings as it pertains to your financing facilities in the near to medium term through payment deferrals or restructures. In the case of residential mortgages over your owner-occupied residence or your investment property. In the case of commercial lending, whether it's commercial practice premises, equipment finance, or goodwill and other specialist lending. I'll also spend a bit of time explaining the government guarantee loan scheme, which will enable you to access critical working capital over the coming months. I'll also touch briefly on a series of fee waivers that we've put in place to support you, and also discuss briefly, for those of you that have got any level of cash reserves. I know it's difficult to get returns at this time, but we have some very significant and attractive deposit offerings at the moment. And then lastly, I'll just touch on the process that you should be going through if you are thinking about growing or expanding your business over the next few months. So let's start with residential lending. So if you are a BOQS home loan client and you've been impacted by COVID-19, and that you weren't in arrears on your home loan prior to this crisis, you are able to apply for a deferral on your mortgage repayments for up to 6 months. This will work in terms of giving you an initial deferral of 3 months, followed by a review, enabling you to a further 3 months for a total of 6 months. This applies to owner-occupied property and investment property. And for investment property, for example, where you have a tenant that has requested rent relief, that would be an appropriate reason to request a deferral. If you do mortgage repayments for 6 months, you'll not be required to make any payment, neither principal or interest, over this period. Please note, though, that interest will accrue and in effect capitalise into the outstanding balance on the loan. After the 6-month deferral period is over, we will recalculate your repayments, which will be slightly increased, taking into account that accrued interest. And the term of your loan will be extended for the period that you deferred it for. So in this case, 6 months. Now, if you're in a position that you are not seeking deferred payments, but you would like some cash flow relief, and you're on a principal and interest variable rate mortgage, you can request your banker to convert that facility into an interest-only facility for a period of 12 months. Please note that if you take up either the deferral option or the interest-only option, that these will not impact your credit rating in any way or your ability to borrow in the future, as these arrangements are explicitly considered not to be ordinary arrears. Now, if I move on to the commercial, now, if you've got commercial lending facilities, and this may be commercial property for your practice premises, it may be equipment finance for your tools of trade, or goodwill loans and other forms of business lending, you can, similarly to what I outlined on residential, apply for a 6-month deferral on your repayments if you are impacted by COVID-19. Now, this applies for clients where the total commercial lending is less than $10 million, and also on the basis that these facilities were not in arrears as at the 1st of January 2020. And if that's the case, it's a pretty simple request for a deferral for a period of 6 months. And like the residential example I used before, there'll be no requirement in this deferral period to make any repayments, albeit that the interest will continue to accrue at the ordinary rate of the contract for the period of deferral. And at the conclusion of that deferral period, your repayments will be recast and your term extended for the period that you had requested deferral. Now, if you are a business that has borrowings greater than $3 million but less than $10 million, you will be required to provide a declaration stating that if you are a commercial landlord, that you will not evict your tenants or terminate their leases during this deferral period. I do suggest too, if you are a significant landlord, that you speak to your accountant or your banker, because the government released some additional rules and requirements around tenancies late last week, and it's important that you understand your obligations there. Now, what I want to talk to you about now is the government SME guarantee scheme. Now, BOQ is a participant in this recently announced scheme, and in effect, the government is providing additional support to lenders and liquidity to the market by securing loans provided by accredited lenders up to a maximum value of $40 billion. Now, this scheme, as I said, will enable businesses to meet near-term cash needs and liquidity needs across the economy. Now, to be eligible, there are a number of rules. You need to be a business which has an ABN, and your turnover in the last financial year, being FY19, needs to be less than $50 million. The borrowing needs are for working capital purposes, i.e. paying your current overheads. These loans cannot be used to refinance existing debt, and they must be drawn by the 30th of September 2020. And one important factor is that clients are only able to apply for the loans once. The maximum loan value is $250,000. The minimum for us is $20,000, and it is an unsecured loan, so you're not going to have to provide real property security. The way that BOQS is structuring its offering under this scheme is that it's in the form of an overdraft. There won't be any establishment fees or ongoing fees, and interest will only be charged on amounts drawn and outstanding. The interest rate on this facility will be at 5.55%. And as I said, the minimum application value is $20,000. The term will be for a period of 2 years. And for the first 6 months, importantly, there will be a requirement you won't be required to make any repayments of principal or interest in that first 6-month period. After 6 months, the facility reverts to interest only. Now, at the end of the 2-year period, we'll work with you to put in place a repayment structure that suits the cash flow of your business at that time. Now, this product that we have put in place under this guaranteed government scheme is a little bit different to that you'll see perhaps from some other lenders. Other lenders are typically having a 6 or 12-month no repayment period up front, but then that will be followed by principal and interest repayments after that deferral period. So this could mean that depending on how long the crisis goes for, that you could be saddled with higher repayments until your business is in a position that you're sustainable into the recovery phase. So please just, when you're considering your options, think through the medium-term cash flows of your business. Now, eligibility criteria is pretty straightforward. It isn't a complicated process to apply. A couple of just broad rules. You need to have had no ATO or statutory arrears at the 31st of December last year, or had a working capital deficiency at that point, and you needed to have a clear credit report. So for the vast majority of our customers, there is no issues with any of those eligibility criteria. But please talk to your banker if you think this facility will be valuable for you. As I said, the application process is very straightforward for existing BOQS clients. In terms of other things that we're doing to help our clients through the crisis, we are putting in place a number of fee waivers to reduce the impact of your business, so that you won't be required we're automatically waiving the monthly account keeping fees on our one account for business for 6 months, and you're able to apply for a waiver of your merchant terminal fees for a period of 3 months if that will help you. Now, in terms of deposits, this at a time of uncertainty and very low returns, we have got some great deposit offerings that can provide a peace of mind and support for those of you lucky that are sitting on some cash. So we have got an attractive bonus interest special on our private access account, which is paying an additional 1.25% or a total of 2% interest over the next 4 months for any new monies put into those accounts. That is a on-demand, effectively at-call account with no account keeping fees and no minimum balance requirements. We also have a special in relation to our term deposits for both 6 and 12 months, where we're paying 1.8% on those term deposits. Again, it's very simple to set these accounts up, so please, and they are low cost. There's no establishment fees or account keeping fees, so please speak to your banker. It's worth noting, just while I'm talking about deposits, that at the time of the GFC, the government put in place what's known as the financial protection scheme for deposit holders to protect the deposits of customers in the very unlikely event of that there was a bank failure. So under this financial claim schemes, deposits up to a value of $250,000 with authorised deposit taking institutions such as BOQ are protected. That includes any savings accounts, cheque accounts, term deposits, transaction accounts, mortgage offset accounts, and call accounts. The only accounts that are not covered by that government guarantee are accounts which are not denominated in Australian dollars, i.e. foreign currency accounts, and any credit balances on your credit card facilities. So in terms of, and this is my last slide before we'll move into some Q&A, but I wanted to state that we are here to help you not just manage your existing facilities through this difficult time, but we are open for business. Now, while it may be prudent to take stock around practice expansion at this point, this crisis will end, and we're here to support you through this period. My expectation is that there'll be what I call a V-shaped recovery, prospectively late this calendar year, i.e. Q4. Expectations are, as I mentioned, while GDP is expected to decline by about 7% this calendar year, it is expected to rebound somewhat next year. So it's important that when you're thinking about your practice and your needs, is that you are, while hibernating as appropriate in the short term, setting yourself up for this rebound. As part of the concessions and the banking relief packages, or the relief packages that the government put in place, they are providing a number of generous tax concessions, both for this financial year and next. And there are two key measures that I just wanted to touch on that are relevant for medical, dental and veterinary. The government announced that for equipment purchases, where the equipment is ordered and installed ready for use by June 30, 2020, you're able to immediately write off that asset up to the value of $150,000 in the FY20 financial year. That's an increase from the standard threshold of $30,000. And I know that there are a number of arrangements out there with suppliers at the moment which have payment holidays for 6 to 12 months, which will enable you prospectively through a chattel mortgage product to access replacement or new equipment and take advantage of the instant asset write-off. Now, the other incentive that the government has provided is the business incentive scheme. So that's effectively an acceleration of depreciation for asset purchases that are purchased in FY21, and that will enable a 50% deduction in year one. Now, as I mentioned earlier, it is appropriate that everybody is relatively prudent in terms of particularly in certain industries over the near term, while the aspects of and the impacts of this crisis play through. Now, if you are looking to materially increase your level of borrowings over the near term, it's likely going to ask a few more questions than we otherwise would. And this is completely prudent. We're here to support you, but we think it's important that you have a clear understanding in your own mind around, for example, what your current and prospective cash flows are, what your assumptions are in relation to being able to recommence business. If you're a landlord, we're keen to understand what's happening with your tenancies and whether or not you've had to provide any rental relief. And also, have you sought assistance, for example, through either hardship or the JobKeeper allowances, which I suggest a lot of you do in order to retain some loyal and employees that will be critical for you when the virus does end. The best thing I can say here is to speak with your BOQ Specialist banker because they are very adept at helping you and facilitate any application for new financing. That brings to the end of my formal part of the presentation. I'll now hand over to Tim Bowring, who I said is our New South Wales Regional Manager and Head of Partnerships, who will facilitate the Q&A. Thanks, Tim.
Thanks, Hugh. Hi, everyone. Thanks for joining us. We've had a number of questions come through already, which is fantastic. If you'd like to lodge a question, please click the Q&A bubble. It'll pop up and give you the ability to pop the question in there, and we'll come to it when we can. Hugh, the first question comes from Jeff. And Jeff says they've had some email communications about deferring their chattel mortgage payments but haven't received anything in writing as yet. How can they confirm their payments are on hold?
Great question. Thank you, Jeff. As you can imagine, when this virus impacts hit us a couple of weeks ago, there was quite a significant increase in the number of applications. So broadly across the bank, there was in excess of 15,000 hardship applications. Obviously, that's not that's the whole bank, not just BOQ Specialist. But we are working very actively to work through both the suspension of direct debit payments and then also the approval of those hardship requests. So we're making very good progress. You should receive an email very shortly confirming that your the status of your application and hopefully that it's been approved for deferral. And then what will happen after that is that we will write to you explaining more detail around when your payments will recommence and what the new payment amounts will be following the recommencement. But if you are worried, please reach out to your banker and they can give you a more specific update.
The next question comes from Ian. Do the banks anticipate a low interest rate facility being supported by the government and banks, i.e. a better rate than on the unsecured offering currently?
Look, I think, as I mentioned, in terms of the SME government guarantee loan, the rate that we're providing is significantly below our ordinary unsecured products. That rate for that unsecured overdraft is 5.55%. As I said, there's no establishment fees, no undrawn line fees or other ongoing fees. It is a flexible offering in terms of the ability to draw and then repay. So my expectation is that that rate will sustain through this period. Obviously, if there are further government support packages which enable further rate reductions, we will of course look at that.
Hugh, I might just add to that as well. The BOQ SME loan is 6 months with no repayments and then interest only for the remaining 18 months. And that is different to what's in the market at the moment. And then the ability to structure a pay down at the end of 2 years, which suits that individual business's cash flow. And I think that's an important to note.
Good point.
Okay, we'll move on to the next question comes from Paul. Are there any bank costs involved in applying for a P&I loan to be converted to an interest-only loan?
No. It's a pretty straightforward process.
Next question comes from Norris. Norris has asked, I've applied for hardship on my business loan. BOQ replied the balloon amount owing at the end of the contracted term is recontracted into a new loan agreement upon expiry of the current loan facility. What does this mean? Hugh, maybe you can explain the three options that are available when facilities are deferred for the 6 months.
Yep, and thanks, Norris, for the question. So as I outlined in the brief presentation at the start of this webinar, the typical approach is that after the deferral period, the repayments will be recast, taking into account the accumulated and unpaid interest that was added to the outstanding balance for the period of the loan deferral. So what that means in simple terms is that the repayments will go up slightly to cover that accumulated interest. The term typically will also be extended for a period equal to the deferral period. So in the case of a commercial product, a further 6 months. Now, there are some nuances where facilities have a short period of time left to run. And customers also can request to keep their payments on hold, keep their payments consistent after the deferral period and increase the level of their residual or balloon payment. Now, that is an option. It's not the standard option because, again, you need to think carefully about what will best match your future cash flows. So, Norris, it wasn't very clear to me that specific question around recontracting into a new facility, I'm happy to perhaps if we could contact us offline, and we'll drill into that more specifically for you.
The next question comes from Eric. What about property loans which are in a self-managed super fund?
The hardship process, based on the criteria that I outlined for commercial property, applies equally to property held in corporate structures, both and for self-managed super funds. So again, the same ability to defer repayments for a period of 12 months. Again, any specifics your banker can talk to you about, but it is equally applicable to self-managed super funds.
Hugh, the next question is from Nick and is in relation to the government SME loans. Nick has asked, is there any security on the loan, for example, GSA?
So if there is an existing general security agreement or GSA that is held by, say, BOQ Specialist, and that will cover the government guarantee loan facility. If there isn't a GSA in place, no GSA will be taken. Now, also there'll be no other direct security, so you won't need to pledge any additional real property to support that loan.
I've got a great question here from Shrajith about the unsecured overdraft facility with the government SME guarantee. Is it only for ongoing expenses, or can it be used for new investments?
So that is a great question. It's effectively set there to provide working capital support. Now, as I said, there are limitations. You can't use it to refinance existing debt. Now, other than that, there are few restrictions on it, albeit that I said the whole purpose for that loan being set up is to provide liquidity support, whether that's paying staff or meeting your near-term overheads through this hibernation period. Tim, have you got anything further to add? I mean, I can see if you wanted to use that facility to acquire a small piece of equipment, you could do that, albeit that, you know, my view would be that you're probably better off applying for an asset finance facility to support your equipment financing needs through this period.
Yes, Hugh, I would agree with that. It is for ongoing working capital expenses predominantly. The other thing it can be used for is if you are a commercial landlord and you have tenants who approach you for rental reductions and you don't want to defer your commercial mortgage payments, you can use this facility as well to cover things like the rental shortfall. Just before we have one more question, so I might just put a call out. If anyone else would like to ask a question, please click on the Q&A bubble and enter your question so Hugh can answer it. This question comes from Alex. Hi, just wondering if we need to apply for deferral of a business loan by letter, or is there a form to be filled? Hugh, I might get you to answer that and then also just talk through the process of applying for the government scheme loan as well.
Great, thank you. So as it relates to requests for deferral of existing commercial lending facilities, that's pretty much as simple as contacting your banker either by phone or email and outlining that you're seeking deferral relief as a consequence of the COVID-19 impacts on your business. The process that we have internally is pretty straightforward. Once you've done that, and it depends on when the next scheduled repayment is coming out of your account, but typically what we would do is we would look to, once you've made that request, is to stop the firing of the next direct debit. Your application will then go into our risk team for just Q&A. Once it has been approved, and I said in most instances, unless, as I said, there was outstanding arrears on the facility prior to the COVID-19 crisis, your facility will be approved. You will receive an email confirmation of that approval, and as I said, in the weeks subsequent, you will receive a more formal letter from the bank outlining the details of that deferral and the what will happen when payments will recommence. What we have done is make it as simple as possible. So the letter that you'll receive won't require you to do anything unless you disagree with what we've put in the letter. Now, as it relates to the SME guarantee loan request, again, that's pretty straightforward. As I outlined, there are a couple of conditions that will be important that you can prove, that you can demonstrate to your banker. Now, the scheme only came into force effectively yesterday after it was signed off by the Treasurer late on Thursday night last week. So at this stage, we've only just started to receive applications. We're endeavouring to turn those around as quickly as possible. But the quality of the information that you can work with your banker on, and think carefully about the amount that you think you need for this period. As I said, the minimum request is $20,000 and the maximum $250,000. Now, while you're not paying fees on any undrawn balances or any establishment fee, just think carefully about the quantum that you need. If you think you only need $50,000, then my suggestion is that you apply for that amount rather than applying for a $200,000 balance. That should facilitate a much faster and simpler turnaround time. Tim, is there anything you think you'd like to add around the application process specifically for the SME government guarantee loan?
And maybe just in terms of the kind of information we'd look for our clients to provide, generally that'll be your FY19 financials up to December 31/19 BAS statements or management accounts, and then clear BAS statements at the 31st of December 2019 showing there are no ATO arrears at that point in time.
Any more questions? We've got a few more minutes left. If anyone would like to raise any additional questions.
Okay. I do have had one just come through from Mary, and Mary has asked, with the business loan deferrals of 6 months, what happens at the end of 6 months if everything's not back to normal?
Mary, good question. Look, firstly, I'm an optimist, and I am very hopeful that things will be back to normal by that stage. But if they're not, then we will work very closely with our customers in terms of working out how best to support them if this virus has a long tail. I think we have worked actively with, as I said, with the government, the Banking Association, and the Australian Finance Industry Association to put forward what we think is a reasonable package of support based on what we know today. But as you appreciate, this is a very fluid environment, and if things change, as I said, we'll work closely with our clients to ensure that we're supporting them through this.
Okay, Hugh, I think that might be it for our questions.
Great. Well, before we say goodbye, I wanted to thank everybody for making the time to listen. Hopefully, you found this informative. We're very empathetic to what the healthcare industry is going through at the moment. It does make me very proud to be part of supporting the medical, dental and veterinary communities through this crisis. A large number of our clients are at the front line of this battle, and BOQ Specialist is here to help those that are helping others. And so we are here for you. Please, if we haven't had a chance to address your question, or you felt shy about asking a question online, please speak to your banker. As I said, we're here to help, and we'll be able to respond to you very promptly. But thank you all for your time today, and I just hand over to Tim to give a little bit of an outline before we close in terms of what you can expect from the remaining webinars in this series.
Thanks, Hugh. Thank you, everyone, for dialing in. Please make sure, if you have any questions, reach out to your dedicated financial specialist. There were a couple of questions which were more personal there, and I responded to you by way of text with my contact details. So please make sure you check that. Shoot an email across to me, and I'll come back to you this afternoon. Our next webinar will be at the same time, 12:30 next Wednesday. We'll be talking about what is financial hardship, trying to understand it and its impacts on your business. Following on from that, we will have a range of special guests joining us, accountants and other industry specialists, to talk more about the market as a whole, trying to help manage your business through this period where there are opportunities in the market, particularly as we run into the end of financial year. So I'd like to just sign off and say, please take care, stay safe, look after your families, and thanks for joining us.
Thank you.